E aí, pessoal, hoje publicando uma entrevista que eu fiz com o time de RI de Edcore, tá? Como vocês sabem, o último vídeo que eu publiquei sobre essa tese foi uma entrevista com o próprio CEO, então muitos dos temas que eu cobri na entrevista com o CEO, eu acabo também cobrindo nessa entrevista com o time de RI, né? Mas de qualquer forma, eu tô publicando essa entrevista com o time de RI, porque ela ficou muito boa, né? A gente cobre tópicos muito importantes, então essa entrevista fica como mais um material aí para vocês, né? Como um material complementar. Antes da gente começar, como sempre, nada nesse vídeo é recomendação de investimentos, beleza? E com isso dito, agora ao que interessa, a entrevista. So, hi Nick and hi Emmanuel. Can you introduce yourselves quickly? What's your role in the company?
Of course, I'll start first. So I'm Nick Campbell. I'm head of investor relations here. So Adcore is a public company traded on the TSX. My goal is really in helping the company get awareness around the market, really understand the good work Adcore is being done, and that materializes in a number of ways through meeting with individuals like yourself, Victor, and obviously our loyal shareholders who want updates around the quarter, any material press releases. Emmanuel works directly with me, and I'll let him elaborate on his role.
So, yeah, hi, I am Emmanuel Ortega. I'm
Hi.
the IR analyst. I work here in the IR team with Nick. So, I'm focused more on daily repetitive tasks in the company, in the IR department. But yeah, here is Nick who is leading this team.
So, Edcore, first, what is this company about? What do you guys do?
So Adcore is a digital marketing technology company. If we take a step back and look at the origins, it really started as a digital marketing agency focused on the performance marketing. So we would work with clients who are looking to improve their metrics, like whether that's return on ad spend, and any other performance metric you may think of. And we have a team of very experienced individuals who have been able to drive that performance through a number of different streams and products. Typically, our focus is on e-commerce, but we're very much branching out as we grow as a company into more brand management, or sorry, brand awareness and upper funnel activities. That's really the origins, but since then we've developed into more of a technology play. And what I mean by that is Adcore is an app developer. We now have 9 apps under our management, and those apps are focused on everything in the digital marketing journey. Whether we're talking about just setting up your accounts across multiple different platforms, whether that's launching your campaigns and seeing ways you can tweak those to optimize them and get the best performance, or reviewing the analytics. We have an analytical tool called SEMDoc. And finally, reviewing your budgets and managing those efficiently. We have an app that can do everything from start to finish and everything in between.
Okay, so Edcore is at the same time a service company, right?
Right.
And also a technology company.
A SaaS solution as well, exactly.
And what would you say makes you different from competition?
Yeah, of course. I'd say, what really makes us unique is particularly the robustness of the solution. And what I mean by that is, we look at the technology, we talk about everything from start to finish. When we look at some of our peers, they may focus on one point, whether it's, data attribution and analytics or, campaign creation and optimization. Agport really does all the, let's call it, onerous and admin activities, but it also ensures you're driving your performance and reviewing all those metrics and managing your budgets all efficiently. So where some, we're really geared towards agencies and advertisers directly, and where some companies would have a very fragmented solution where they'd be using, Criteo, and then might be using, a number of different applications. We are trying to centralize all those activities into one hub where, you don't need to go cross-platform. You can do everything through Adcore's Marketing Cloud, and I think the robustness really sets us apart.
Okay, so as far as I understood, Edcore aims to solve the following problem, right? So back in, I don't know, 2010, we had only like a Google, so you pretty much, the only thing you needed to do was set up a Google account and you were ready to go, right? However, lots of different platforms and social networks have emerged, and now you need lots and lots of different accounts to be able to advertise properly, right? So Edcore appears as a solution to this big problem, centralizing everything in just only one platform, right?
Yeah, exactly. I mean, again, you hit the nail on the head, Victor. But to elaborate, imagine just getting started. If you want to advertise, we talked about back in the day, there's maybe two networks you really need to get established on. Fast forward to today, there's 50 to 100, and they all have a bit of nuance on how to approach each platform. Like something that's working on, LinkedIn is not going to work on different social channels like TikTok, etc. So what Adcore aims to do is really create a platform, and what we have done is created a platform that, if you want to set up an account, you use our one app, Media Blast, and now you have accounts set up across the different platforms. If you want to, launch campaigns, instead of having to go to TikTok, Facebook, Meta, and then Google and Microsoft, you can all set those campaigns up through our platform. And then, again, reviewing the data, it's all commingled into one, and it really ties the seams instead of needing to go from platform to platform and try and make sense of it all and try and manage it all.
How do you use your apps? Do you use them as a unique application, or each one of them has its own purpose? Can you comment a little on that?
For sure. So first of all, they're accessible through the Marketing Cloud. So you can go through your web browser, access them anywhere, anytime. It's all centralized there. But each app, as you kind of alluded to, they'd all have their own unique function. So, we talked about Media Blast. That's just setting up and funding accounts.
So Media Blast is used to create different accounts in TikTok, in Facebook,
Microsoft. And then, you have SEMDoc, which would be our performance attribution tool, which again, you connect your accounts to it, and then all the data comes streaming in. And then the other app I'm looking for here, apologies, is Feeditor. That's again more branded towards if you have long list of products feeds, which is quite common for e-commerce companies. These help you clean those up, and then you can export them to all the different networks. You don't need to, work through Excel and then upload to each individual network. So as you mentioned, there's going to be let's call it an intent and a value add for each app, and they're all accessible online, but they each have their own areas they're servicing.
And your app suite works like Adobe's package, right? You can subscribe to the whole thing, or you can only subscribe to only one of the apps, right?
Right. And there's obviously the incentive to buy the whole suite. It's a monthly payment or yearly, depending on how you want to approach it. But if you pay for it monthly, the average cost, I believe, is around $50. But if you buy the whole suite, it's somewhere around $100. Some of those apps, which we can get into, but some of those apps do have somewhat performance fees baked in, meaning the more you use them, there will be a bit of incremental costs. But that is the gist of how the revenue streams for the apps.
And which are the most important apps for you right now? Which are the ones who are generating the most revenues?
For sure. Just before I get to that, I'll take a step back and just kind of help yourself and the listeners understanding that these apps were all generated through demand from our clients, right? So we operate as a performance-based agency. That means we're working directly with clients, and we can kind of see, if we're helping them manage their ads, or maybe they ask us, hey, we're looking to do this and we don't see a solution out there. That's really the origination for all these apps.
So you started as a service company, right? As a digital marketing agency, and you started to realize some demand for these solutions. And that's why the company itself decided to develop these apps, right? That's how everything started.
Yeah, we saw some glaring gaps within the market when we were helping service the management of our client budgets, and that's really why we created any one of these apps we talk about. But when we look at today, which ones are really driving value for us, we'll first talk about Media Blast. Again, it's one of our newer apps, launched about 2 years ago, and quite a simple.
Which was the first one, Media Blast?
No, the first one would have been Feeditor. That was our app about kind of cleaning up your product feeds and really geared towards e-commerce. It's still our flagship today. That's what I would say is our second most important. But as of today, Media Blast is our fastest growing and probably responsible for the most revenue. And I'll take a second to kind of highlight what the value it's really adding to our clients. So Media Blast, again, sounds like a really simple app, and candidly, it is. It's all around setting up different accounts and helping fund them across different platforms, which is, somewhat of an onerous activity, but not the most challenging. But where the ad core value really comes in is when we work with these clients in some regions. And again, the main target for this app is really agencies who have 100 different client accounts. They're not just one or two. And there's a number of areas that are treated differently by the ad networks, being Google and Microsoft and the bigger platforms out there. And what I mean by that is there's maybe an extra layer of scrutiny on these certain geographies and maybe business types. And so when they're trying to launch campaigns or roll out their campaigns, they're temporarily flagged and taken offline. And then you have this advertiser who's relatively small trying to reach out to the ad network, being Google or Microsoft. And, those are large companies, which I'm sure anyone can appreciate who's tried to reach them. It's nearly impossible. But so for a smaller advertiser, they are put in this position where they're huge opportunity costs. Their ads aren't live. They're usually agencies, so then they're accountable to their clients or asking what's going on, how quickly is this going to get resolved. And as a smaller advertiser, that's actually quite a difficult activity to solve in a timely manner. So where AdCore steps in is we're partners of Microsoft, Google, the big platforms, you name it. And we can help as a layer, being a partner of those networks, helping to get their ads back online and helping them, something that might take a couple weeks, we can help them accomplish in a day or hours. And, that's not to say there's any skirting around the rules or anything. It's just helping to get that timely reply and helping them, maintain the standard that's being requested. Or, sometimes it is just an error on the platform side that we can help get resolved. So that Media Blast, when we look at the revenue figures, in its first 10 months, it did about 1 million in ARR. The next 6 months later, so at 16 months, it was at 2. And then as of April 2025, which would be about 18 months in, it was at close to 2.3 million in annual recurring revenue. So that is an app that we see a pathway to get to 4 to 5 by the end of the year. The reason for that being is, again, I would say the portfolio of companies using that app is still very let's call it e-commerce related. So we expect budgets to expand into the second half of the year, and we're still seeing increased number of users on that platform.
And how much is Media Blast generating right now?
No, I don't have the exact number. I know as of if we're just looking at performance figures, like how much it's improved over the previous period. So for August, I knew it still grew about 50% over the previous August. So when we're looking just period over period, it's still making great strides. But fortunately, I don't have a current ARR figure. But the hope is and we feel confident we can get that to 4 to 5 million. That's really going to be supported by expanding
by the end of the year.
Right.
And how much revenue are all your apps delivering right now?
They're responsible for about 30% of the business. So 20% of the business. So when we look at, the 32 million that we did last year, I'd say probably close to 5 to 7 million of that is app based. And then the next biggest one would be, of course, Feeditor, which is our one that's geared towards e-commerce clients and cleaning up their product feeds. But again, those numbers, they change every month, so it's hard to give you an exact figure for today. But I guess what people should understand from this conversation is that the company's intent and our big bet is on technology. So while today it's still somewhat marginal in the grand scheme compared to the service business, we see a lot of opportunity there. And on that note, that's kind of our commitment to keep developing and to round it out with a third app being Proposally. That's our newest app that we expect to go live later in this year. And along the lines of, streamlining activities, kind of commingling them all in one hub, Proposally is no different. I'll give you a short pitch here. It's really all about, so as a sales individual, or let's say we're looking at the blue collar industries like roofing or doing driveways and construction. Those are type of companies where a lot of their labor force is, laborers and people, blue collar workers. So they might not have a back office staff to produce nice professional proposals for their clients, yet they want to. So what the solution we are offering is one where we'll help onboard you. We have AI features in there where, like, let's say you're a roofer, you type, I am a roofer, here is my website, give me a proposal, and one will be spit out in 1 to 2 minutes. And from there, you can customize, and once you got your template down, it's quite simple, client from client. You're going to customize the client name, of course, the costs, the materials used, etc. But you should be able to get a proposal done very quickly, 5 to 10 minutes from client to client. Through that platform, you
Okay.
can send them the proposal, and then once they receive it, they'll review it. If they like it, they'll agree. And then once you're all on the same page, an agreement will be generated through Proposally, a legal, compliant, binding agreement, to which then once the agreement is signed, you can make payment through Proposally. So what it is commingling a number of fragmented areas. So back previous to Proposally, you'd use PowerPoint, then maybe convert it into a PDF, and then you use DocuSign, and then Stripe to do all those activities. Well, instead of using 5 different apps, you're just going to use Proposally, so it should be more efficient and cost efficient as well, because you won't need to maintain those subscriptions for those apps.
Okay, very interesting. Okay, so the first step is Media Blast. The second one, in terms of importance, is Feeditor. Am I correct? And the
That's right.
third one should be Proposally, right?
That's kind of our dark horse. Again, it's in the beta testing phase, so we have a number of clients using it, and we're ensuring things are operating effectively. But I would expect to just really start meaningfully contributing to the revenue stream probably 12
Mhm.
to 18 months from its launch. So, we'll still need a year or two out, but yeah, we're quite excited about it.
So the technology segment represents around 20% of your current total sales, right?
Right, right. And there's a great opportunity there to cross-sell as well, right? Like the clients we're working with, we obviously give them licenses for the apps and, try and get them to use them. If there is a future where they're no longer a client of the service-based business, they might become app users or, they might enjoy them so much that they pay for their own subscription anyways.
Okay. And the key thing about Edicore is that this technology part is probably going to increase, right? Is probably going to grow. Do you see this technology segment reaching 50% of the company's total sale? Do you have a target in mind? Do you have a number in mind?
Yeah, well, we're targeting a lone media blast for 4 to 5 by this year, right? So that would be, don't quote my math, but that would be responsible for at least around 15%. And then when you roll out the
Hmm.
other apps, that should get us over the 25% mark. So when we look forward, again, need to be conscious about our projections here, but I see a great opportunity for Media Blast that continues to perform well. But if it continues at the current rate, I think it's something like within 3 years, just that app alone should be responsible for 50%. And, I'm not going to guarantee.
Just that app alone
Right.
could be responsible for 50%.
If it
So
continues at the same run rate, correct.
okay, so this wouldn't be an aggressive assumption to project the technology segment to reach 50% of total sales, right?
I think that's our hope. And I think, we're quite confident in what we're creating. I think, but the proof is always in the pudding. So I guess, while we feel good and confident about it, something like Proposally, we obviously want to get it to market before and see the reception, demand, etc., before we get too excited. But, just speaking about Media Blast alone, I see a lot of potential there for that to, again, get up to, a significant amount in the next couple of years.
And I assume that the technology segment revenue is probably higher margin when compared to the service
Of course.
segment, right? Can you say what's the gross margin for your technology segment for your apps?
For sure. It differs but depending on the app, but I'll give you the range of gross margin between, 65 to 80% for any given the apps. So, you see today the gross margins as of Q2, I believe they're 46 or 47%. But what you see there is once those take a larger portion, the larger portion of the revenue stream, you're going to see significant improvement in fundamentals as that accretion from the higher gross margin business taking a larger share. So again, you should see improving fundamentals in the coming year as well.
What I imagine will happen is that as the technology segment grows, we could see gross margin reaching 50%, maybe even higher, right?
Yeah, I think that's more than manageable. Again, I would have to do the math exactly, but let's say the technology is taking up close to 35%. I believe that would get us over that 50% gross margin hump.
And you mentioned that the apps are generating you recurring revenue, right?
Right.
When you say recurring, how much time do your contracts last? Can the client decide to stop paying the apps next month? What's
The stickiness. So like a lot of these kind of SaaS solutions, we give them the opportunity to either opt in for a year or month to month. And, there's different benefits, whichever you choose. And it's important to note a lot of these apps have freemium options as well for you to try them out. And if you like them, then you upgrade to the paid version. But what I would say is once you do upgrade, we have a paid user. It's quite sticky. We have about 70 to 80% recurring, meaning year over year, we retain about 70 to 80% of the users.
You tend to retain 70 to 80% of your clients, right?
Of the app users, right?
And what do you plan to do with the legacy segment once the technology part of your business grows? Do you pretend to keep the legacy segment, the services part?
I think so. I think it's actually a strategic advantage, right? It kind of makes us uniquely qualified to market these apps and really keep developing new technology. Kind of what I alluded to in the past as well. It gives us a good opportunity to have a first pool of potential users for these apps as well, right? Like a lot of these different agencies, advertisers we're working with, those are probably the first people's door you want to knock on when you go to market with an app like, say, Proposally or any new app we create. But, I think we feel very early in both aspects of the business. Again, I think technology is very exciting because the economics, fundamentals, etc. But even on when we look at the legacy, the agency side of things, Australia was really our first, let's call it, departure from where the company was started in Tel Aviv, Israel. And that is now our strongest area. So we set up a business there. And, now today, Australia is probably our most successful region when we look at the service-based agency. But then you look out again in North America, we've really started to commit to, let's say, in the last year and a half, 2 years. And that is also the biggest area for advertisers and clients that would be in our wheelhouse. So I guess what I'm getting at is that we are still a very small fish in a big pond, and there's still a lot of opportunity there. And, it's actually pretty complementary to the technology side as well, we find. So, the rate at which we're investing, let's think about it. It's obviously dependent on how the economy is and how things look, but definitely plans to maintain it and continue growing it because there's a lot of opportunity out there for still today.
You just mentioned that Edcore is present both in Australia and in North America. From what I can tell, Edcore is a pretty well geographically diversified business.
Right.
Can you comment a little on that?
Sure. So I think if you look on an annual basis, you'll probably see 50% of the revenues from the APAC region, and that's really driven by Southeast Asia. That's where the demand is for Media Blast. And then on the agency side, Australia. So again, those are actually the lion's share of the revenue today. And I think it's probably a clean split between North America and Europe and Middle East, which is, kind of where the core business started in Tel Aviv.
Now, speaking about your balance sheet, do you have any debt? What's your cash position?
So I think the balance sheet, the financials are really what makes Adcore stand apart from its peers, right? We're talking about a microcap company, and probably the most robust balance sheet I've ever seen. We have about 9 million in cash, and then zero debt. So when we look at the company, from enterprise value, that gives you an enterprise value of close to, 5 million Canadian, which is quite incredible. And
5 million Canadian.
yeah.
And how much operating cash flow did you generate over the last 12 months? Do you have that number in mind?
I'd want to double check, but I'm going to say it was close to 2.5 to 3 million.
So, with an enterprise value of 5 million, that means that Edcore is trading at around 2 times enterprise value to operating cash flow, right?
Right.
Just to confirm, your target for 2025 is $40 million in revenue, right?
Right.
And the technology segment should get to 30% maybe.
Yeah, we'd hope. I think, between around the 4 to 5 million range is what we're aiming for.
Okay, and still talking about the cash, what do you plan to do with the cash you have in your balance sheet? Is the plan to keep it on the balance sheet for safety or acquisitions? How should we think about this cash?
Yeah, so I think, the short-term need is really when we look at the operating cash flow, a lot of it's being invested back into the business. But then when we look at the cash balance sheet, the company, it's important to note it was a bootstrap company, always been very fiscally prudent and responsible. So when you look back at the history, Adcore always maintains a pretty nice and healthy buffer. I would say, around the 5 million mark, if not more. So, short-term intent is to keep us well funded, and the reason why we do that is because the future is unpredictable. So we want to ensure we don't risk dilution for our shareholders or have to take on any debt to keep the lights on. And so, to answer your question, I think you'll see more increases in maybe G&A and human capital. Again, we're talking about building out the North American team. But really, I expect to see that cash amount build into the end of the year. So last year, I think it was around 10.8 million. Our expectation is for that to increase by the end of the year, hopefully, to a number greater, let's say 11 to 12 million.
Okay, and do you see the company taking on debt in the short term, or that's definitely not in the plan?
No, it's just kind of against the way we operate. The company operates in our mindset. But what I will say is we're as we continue to develop these apps and enter new regions, we are looking for acquisitions. I wouldn't say too intimately right now with the share price where it is, as a lot of times we'd like to do a share deal, and it would be hard to find something accretive at these prices. But we're always looking to see what makes sense. But for the current moment, we're kind of putting our heads down, focusing on the business and growing organically.
Okay, Edcore has a very high insider ownership, right? What percentage of the company do insiders own?
So insiders and management own around 68% of the outstanding shares, with the bulk of those being owned by the CEO, Omri Brill. Again, he's the CEO and founder, so it's really his
Uh-huh.
creation. And I don't think he's sold a share to this day, as he believes the company is significantly undervalued. No real exit kind of plan in mind. He's a young, very entrepreneurial man, has big plans for the company. So, again, if you're curious about his exit is to just continue building the business, and he knows, we'll get that valuation and credit due in the future. So, no exit plan in mind at this moment.
Okay. Now coming back to your apps, how difficult would it be for a new competitor to start competing with you? Are there significant barriers to entry in your business? How difficult would it be for someone to start creating the same technology as you guys?
Yeah, I'd say there already is existing competition for the number of the apps. I think what we're seeing with Media Blast is a bit of a network effect. When we talked about the success it had, was really from, again, we had a couple agencies there that needed it, and then word of mouth spread, and really all the demand we've seen has been internal. So, of course, I think competitors can come in, and I think I actually saw an advertisement for ChatGPT doing something similar to Proposally, which again kind of might be scary, but it does let us know that we're on to something, being that there is demand for such a service. So, it definitely would take significant capital and time to do, but I would say even the time portion is somewhat shrinking over time with LLMs and being able to code much faster. But again,
Mhm.
we have a very loyal customer base, and that's hard to replicate.
How many clients do you have in total? And one risk here is client concentration, right? Can you
Right.
comment on that?
So I think we have over 300 clients. Um, when we look at the whole suite, the breakdown, again, most of those are going to be on the agency side. You're right, we have a number of big clients that represent, I think the top four clients represent somewhere around 40 to 45% of the total revenues. Those are clients that we've had with us for a long time. If you look back in the history, that's been quite natural for the company. So those are good relationships that we have that, we aren't really scared of losing. One of them is a partner of ours that, it's a very profitable arrangement for both of us. So, the client risk, I think naturally you see that with a lot of companies, like I see it with some of our peers in the space. But there's very tight relationships there that have existed for a long amount of time. So, and I do see, if you look over time, you will see that client concentration actually reducing over time as we continue to grow and really build out our different services. Again, we talked about performance and the apps being, let's call it the long-standing businesses, but now we're getting into brand awareness. All these evolutions of the business, I think you'll see that client concentration go down, and you already have over the last couple of years.
Okay. And lastly, what gives you confidence that Adcore will continue growing going forward?
Yeah, I think part of it comes from
Do you see this company reaching, for example, 80 million in revenue?
Yeah, no, for sure. I think, with Adcore, it's been a bit of I think, for me to rephrase, I definitely see 80 million being achievable. When we look at that, again, I think it's going to be technology driven. But again, when you ask me where my confidence comes from, Media Blast wasn't really even an app a couple of years ago, and now we see it growing. I think last year or the last 12 months, it grew something like 200 to 250%. And when you see significant traction like that, 250% growth continuing, that will get you to that number quite quickly. So I don't want to put all of our chips in the Media Blast bucket, but I'm saying there's clear understanding from the team that they can create technology and find solutions that there is a demand for, and quite effectively. So looking at that, I think the technology is really just getting started, and I think anyone buying it here now gets the opportunity to buy a company with an enterprise value of less than 5 million and creating some pretty exciting technology that can make this a home run pretty quickly.
Okay, so frankly, I'm out of questions. Do you have anything else to add that you find important?
Yeah, I'd say, again, keep a close eye on Adcore. We're very news flow driven, and that's our intention, is to be very transparent and let people know how things are going. So, we plan to provide updates on the technology side, how that's progressing. Obviously, we do quarterly reporting, so it's good to keep an eye on those and ear to the ground. But really, we're coming upon our best months here. So I think Adcore presents a really great opportunity. Looking at, again, we talked about the cash balance. The cash value of shares is probably close to 16 to 17 cents, with the share price just a bit north of that. So, for the investor looking at the name today, I think it's quite compelling when you look at, the huge margin of safety here and some of the exciting things we're doing that can really catapult the company.